Good morning, everyone. It is Friday, April 26th at 6 a.m., half an hour before the market is opening. And we're going to close out what has been a very interesting week so far. So yesterday we were talking about how we had to watch earnings. We have Google, we have Microsoft, we have Intel, we have a bunch of energy companies that are all reporting sometime between yesterday afternoon and this morning. We also have the PCE report, which is the preferred inflation measure for the Fed. So interest rates are going to be really important today. Things that are sensitive to interest rates, tech stocks, those are going to be the focus in the market today, which means there's going to be less focus on things like consumer staples, healthcare. So those types of stocks, if they get less attention, then they're more likely to slip as money goes into into tech stocks, then money stops paying attention to these sectors and there's slippage. So, or it could work the other way. If money is fleeing tech, then we go into safe havens. So one way to play it is, hey, let's go where all the money is, but we can also play where is all the money leaving. So let's see how everything's playing out. Let's take a look at that PCE. Oops, I think I muted myself, but we'll see how everything is playing out this morning. So let's take a look at our economic reports, personal income and outlays. And we've got the core price year on year higher. Consensus was 2.7. We got 2.8. That means inflation is up. That means inflation is higher than expected. Same with PCE. Consensus 2.6, we got 2.7. These are really what we care about. The other stuff is it's not really that important. So we have inflation higher than expected. Let's see how our futures are doing. So that should be negative news for us. So, but all our futures are up. We've got the S&P up about 70 basis points. We've got Dow up 10 basis points, and we've got the NASDAQ up 85 basis points. So beyond random in the NASDAQ for sure, beyond random in the S&P 500, and random in the Dow Jones. So this is what I was talking about. All the attention is over here on tech, which means there's very little attention over here on the Dow Jones, and very positive. So definitely this movement is not related to the PCE, because that should be a negative movement. And that means we're probably looking at earnings, and of the earnings that were coming out, let's see, today before market open, Exxon, Chevron, AbbVie, Colgate, Palmolive, PSX, probably not these stocks. They're probably not the ones that we're getting excited about. It's probably the ones that were yesterday, which were Microsoft, Google, Intel. So let's take a look at what's going on over there. Let's take a look at Intel. Intel positive earnings, but way down. And so this is kind of what we've been seeing. The movement of the earnings reaction has been opposite of the news of the earnings. So Intel way down. That's definitely not helping the market go up. So Microsoft and Google must be doing very well. Microsoft, positive earnings, and way up, all the way up, opening at its EMA8 over here. So this is in the direction that we would expect: positive earnings, positive movement. And let's take a look at Google. Positive earnings. And I don't see, oh, here we go, up here. Positive movement, very high. Looks like, ooh, what is this? We closed at 157, so 20. So 160, 12, 15%. That's Microsoft and Google look like they're bringing the entire market up. Of course, that PCE report doesn't help, but right now we're looking at sentiment. Sentiment is outweighing fundamentals, and those fundamentals, are not a direct influence on the market anyways. It is an outside force, which is the Fed acting on the market. So sentiment was winning today. Let's take a look at our pre-market and see how everything looks. So we got a spike at the PCE report, which is strange because that was negative news and we should be going down, but then it traded off and now we're flat. So basically that PCE report didn't really do much for us. It didn't really change the market all that much. So really we're just riding the high of those earnings reports, particularly Microsoft and Google. So we're definitely up, but that doesn't mean we're going to stay up. Just like yesterday, we were definitively down at the open. And what do we always say? We've got about a 70% chance of moving back towards where the previous day closed. So today we're opening up and we have a decent chance of moving down. Now in the S&P and the QQQ, it's unlikely that we're going to overcome the initial gap up, but we'll probably won't close. So we probably won't close below yesterday's close, but we might close below where we opened, which would give us a red bar. So let's see what that would look like on the S&P 500. In the pre-market, looks like we're opening up over here near the 2 days ago high, and also somewhat near the EMA8. So what we're going to be looking at today is, do we trade upwards, get near that EMA8, and then start trading down for the rest of the day? That EMA8 is at 507.87, and we've got a purple line right here at 508.50, and our VWAP, at least pre-market, is at 507.67. So very, very close to our EMA8. So it wouldn't be surprising at all if we trade upwards a little bit to that VWAP and start coming down, or even poke our head above the EMA8 a little bit, hit that 508.50 and start coming down. This is going to be pretty important. That 508.50 is going to be pretty important today, because if we could get above that and stay above that, so if we move beyond it and then retest and move higher, that's going to mean that we're probably heading towards the MA50. And then the MA50 we'll have to see. Right now, the probability is still higher that we're going to keep on moving down. But if we do trade up to that MA50, we're not talking about huge differences in probabilities anymore. We're talking about 55, 60% to come downwards, and then 45% that we might actually break above that MA50. So our probabilities are decreasing that for the possibility that we're going to come down and get that 10% correction. However, it is still the more likely scenario. So we want to adjust ourselves. If we've been counting on that downward movement, we want to adjust ourselves a little bit. And now if you have positions, unless you have a very large portfolio where you can make where like one contract or a couple of contracts difference is just a fine adjustment for you and not a huge motion in your portfolio, that might be difficult for us to make these small adjustments due to these differences in, or these changes in probabilities. So in that case, we would just micro hedge. We would do baby little hedges of small amounts. We try to do 50, 100, 200, depending on the size of your portfolio. We want to risk a small amount and protect a larger amount of your portfolio. Now remember, hedging doesn't mean eliminating all risk. It doesn't mean, hey, if we trade above MA50, I'm not going to lose anything. It means that if I trade above MA50, I'm not going to lose as much or nearly as much as I would have if I didn't have that hedge on. So we can do small micro hedges with the appropriate amounts of money, so we're not risking a whole lot in order to have a meaningful protection on the portfolio. But in any case, the probability is still higher that we are going to move downwards and get that 10% correction. It's just not as high as before. If we look at our QQQ, QQQ looks like it might open up just above that MA90. So same thing, it could move upwards towards that EMA20, but we have this previous high right here that's going to act as a similar area of resistance. So we call that a region right there. That high and that EMA20 is going to be important to see if we can get above those, or if we hit those and then we reject to the downside. On IWM is not painting nearly as rosy of a picture. Our pre-market movement upwards isn't as high or as significant as the previous two indices that we looked at, and it's just barely above that EMA8. So we're already opening at resistance, and then we've got that EMA20 pretty close, along with the previous highs right here that are making this 199 to 200 region very strong in the IWM. If the small cap stocks can't go higher, then they can't obviously lead, and that's not a great signal for the overall for the chances of a bull market. Okay. If I look at Dow Jones, did we look at Dow Jones yet? We have not. So Dow Jones, again, not nearly as good as the QQQ or the S&P. That's not surprising because we did indicate that the focus would be on the tech and the QQQ because of the Google and Microsoft and Intel earnings, but also because the PCE, the inflation, has more of an impact on interest rates, and interest rates will more directly affect interest rate sensitive sectors, meaning tech, finance, utilities, sectors like that. So our focus is going to be, and the majority of the movement and the action is going to be over in QQQ, not in the Dow Jones. So it looks like Dow Jones is going to have the same problem that the IWM has. We're opening near resistance, and there's a pocket of heavy resistance not too far above it. So I would say our ability to move upwards is going to be capped and limited. It's going to be difficult today for us to move significantly higher. So the more likely scenario is the one we talked about at the very beginning, where we move upwards in the SPY. We move upwards in the SPY and maybe get kept out at this 508-ish, 508.5 region, and then start moving downwards. That's the higher probability, and the one that we'll probably prepare ourselves for, although we don't want to go all in on that because the probabilities are like super skewed in our favor. So if we look at VIX, VIX is higher. You can see that at some point this morning, it went all the way up to where we opened yesterday. We are down lower, but we're still above where we are yesterday, which is strange because look how much higher we are above yesterday's close. So volatility is telling us a slightly different story. This could be weekend, the fact that we're moving up towards the weekend, which is another risk. So we don't want to go too directional today. So VIX is indicating that, hey, yeah, things are up this morning, but we're still a little leery of what might happen, and the market makers are preparing themselves for some volatility over here. We look at TLT. Actually, let me look at CPC first. We haven't done that in a while. 0.93, so that's not really telling us anything. Let's look at TLT. TLT yesterday broke back down below this channel. So now what we have is move down below the channel, move back up, and then I don't want to make significance of the EMA8 because the EMA8 is not something we normally look at the TLT. So we'll just suffice it to say that it came up and it hit this resistance right here. So this low over here, and then it curved right back down and then broke below that channel again. So this is the market kind of waking up to the fact that, hey, our interest rates, we're just not getting that cut. We're just not getting that cut anytime soon. or does all the data that we've had recently, and actually all the data that we've had for like half a year, if you really look at it, because if I'm able to see it, other people are able to see it also, that we're just, I mean, 0 to 1. Right now, it's looking more like zero rate cuts in 2024. That's really the scenario that we're looking at. So the fact that we keep pricing in 3, and before we had in 6, that's kind of ridiculous. So this market has to realign itself and just wake up to the fact that, hey, we need to move lower. And so it looks like we're going to open right at the channel today. I won't be surprised if we continue to trade downwards from here, although we could pop back up a little bit, not move quite as high as up here, and then move downwards. Let's take a look at I don't want to spend time on the Fed watch this morning. We can do that later in the weekly market review. So just to remind you, today is Friday. We don't have post-market sessions on Friday because we wrap it in with the weekly market review on Sunday. And so I think we want to take a look at we don't need to look at our sectors because we're going into a session. So what we want to do is watch very carefully. Either we can focus in on the tech sectors, or we could focus in on the sectors that are not going to get a lot of attention. Since tech is getting attention and mostly to the upside for the opening, we could trade down. Actually, it's pretty likely that we're going to trade down. But instead of putting money into tech, then we could look at, if we're expecting it to trade down, then we would invest in those sectors that are going to be ignored or are initially ignored. If I have a lot of excitement over here in tech, then money is going to not be paying attention to healthcare and utilities. Money will leave those sectors. But then if tech starts selling down, money will go back into those sectors. So as this sells down, we may want to start paying attention to energies, utilities, staples, healthcare. But if it does break upwards, then we will look for short opportunities in those other sectors that we mentioned. Let's just take a quick look at XLK. XLK is hitting resistance anyways. It just popped up to the EMA8 and then it's floating down. Although it looks like at the open, we will just go right back to the high right here, but we have that EMA20. So very similar scenario that we've been talking about on the QQQ and the SPY, which isn't too surprising, especially with the QQQ. We'll look at XLV. Okay, so this is a little bit easier, right? Went up, it hit the EMA20 and it traced back, and there is no bouncing or anything. It's still moving downwards at the pre-market. It's still down. So that was what I was talking about. The XLK, QQQ, the expectation is up. Well, XLV is down because money leaves this sector in order to go into those techs. So this is a little bit more of a sure direction that, hey, there's no downward support for a while. So it might be a more of a safer and steadier bet for me to go short in a sector like XLV. XLP, okay, same thing. It's moving downward for the exact same reasons, but here is a lot less clear because XLP is in an uptrend, but we are hitting resistance right here. So this would be a very long double top. Now let's look at XLU. XLU definitely in an uptrend and opening flat. So this is not nearly as sure of a thing. And then let's look at XLE. XLE opening down a little bit, but right at the EMA8 into support. So the overall direction is up, pulled back. Our expectation is for it to resume upwards for now and see if we can break above these highs a little bit later, maybe next week or the week after. Excuse me. So I were I would either pay attention to the tech sector or QQQ for today and the XLV. Those are the two that are the most clear. Okay, so I think that's it. I think we got a pretty clear idea of what to focus on this morning. We want to watch very carefully this S&P 500. Does it trace up to the VWAP right here and then start moving down? Does it trace up to this 508.50 region and then start trading down? Or does it trade down to 505 and start moving up? Or does it start trading up and just blow through that 508.50? Or do we just start heading straight downwards from the open? Okay, so normally we don't do that. Normally we do things like yesterday. We move down, we test a level, and then we move in a direction, or we chop sideways for a while. Basically, we look for a direction. We trade towards a resistance or support, then we test, and then we look for a direction. And so that's what we're going to watch out for this morning. Okay, guys, we'll leave you to prepare for the session. Have a wonderful day. Have a wonderful weekend. I will see you in the weekly market review.